Hello, good morning. You're watching Market Cafe on all the important updates that have come in overnight, how you all should be set up for the morning trade, which will be starting at 9:15 a.m. So let's keep an eye on that. We'll take you all through all the important updates. But starting with the most important update is how the overnight handover also looks like.
Absolutely winning.
And what is the cue that we're getting in? At one point of time, we did see a sharp fall coming in the US markets. But by the end of the day, how did it shape up?
It was continuing to fall, Vinny. Slight bit of recovery, but not much overall in the red for the US markets. Good morning. Let me take you through what the global handover looked like. In US stock futures hovered near the flat line last night following a sell-off spurred by the high bond yields and worries that the Fed Reserve may not cut rates as Wall Street had hoped. Now, during Monday's main session, the S&P 500 lost almost 0.3%, pulling back from the record high level that it hit last week, and that was powered by mega cap tech stocks as well. Now, the 30 stock Dow also retreated from its high, ending the session lower by 0.7%, and Nasdaq has also lost 0.2%. So all three indices have ended in the red. So we'll see how those indices trade today. And well, the decline in these stocks largely came after Fed Chair Jerome Powell reaffirmed that the cut at the central bank's March meeting is unlikely to happen. And this has also led to the 10-year Treasury yield rising about 13 bips on Monday to 4.16%. Treasury yield is again over that 4.1%, so that will be one cue that we'll be watching out for. And well, on the economic front, Wall Street will also be keeping an eye out on a whole host of economic indicators as well as earnings. Now, New York Fed's household debt and credit report for the month of January will be coming out, as well as for the fourth quarter, and several central bank speakers are slated to give comments also today. So well, the street will be watching out on all of this commentary coming in. You've got some key earnings also coming in from the US, so the street will be eyeing all of that as well. So well, Vinny, that's largely the handover coming in from the US markets. But shifting your focus to the European markets have also not done rather well in yesterday's trading session. The US spillover has been showing some effect on the European markets as well. DAX was rather flat but ended the day in the red nonetheless. FTSE also flat, not doing much but in the red. CAC, the same thing we can say for that as well. And Stock 600 less than 0.1% down but ended the day in the red nonetheless, Vinny. So well, this is what the global handover is looking like. Not looking too optimistic, but we'll see how that pans out for us this morning.
Absolutely, we'll see how that pans out for us. As of now, the implied open muted to slight but positive bias is what we're seeing. But obviously, let's keep an eye out on what crude oil prices are doing as well. Early morning trade remained almost flattish as of now when you're looking at the crude oil prices. Brent crude oil $78 per barrel mark is what Brent crude oil is trading at. Just moved into the green a short while ago as well. While WTI crude oil also quite flattish is what the move is coming in so far this morning for the oil prices. Now, obviously, these oil prices are a little bit of a move that we're seeing coming in. Nothing great, because what has happened is that everyone is just assessing the situation of the US Secretary Blinken actually going to discuss in terms of the ceasefire in the Middle East region, the Saudi de facto ruler as well, and that is one of the reasons that oil prices have remained a bit muted. Everyone is just keeping an eye out on the situation. Not much of a move that we've seen in terms of the oil prices this morning. Other than that, let me just take across the gold prices as well. Gold actually hits the $2,043 per ounce mark as well. Little move in that front as well. So let's keep an eye out on gold prices. A bit of a positive up move is what we're seeing for the gold prices as of now. But yes, that's how overall seeing in terms of the commodities market moving, whether you look at the WTI crude oil, Brent crude oil, or the gold prices as well as saying.
Well, absolutely, Vinny. But let's talk a little bit more about the oil market then, because the Buffett-backed Occidental flagged supply shortages by the end of 2025 amid failure to replace current crude reserves at an appropriate pace. Now, the supply and demand outlook will flip by the end of 2025, says CEO Vicky Holler.
Okay, that's about oil, but a lot of important events and cues that we're keeping an eye out on as well. And obviously, on the global front, we'll be watching out for the Euro retail sales numbers that will be coming out today. Other than that, let's watch out in terms of, for dividend. If you do want to be eligible for dividend for Aarti Drugs, CMS Info Systems, GAIL, Kirloskar Pneumatics, Motilal as well, NTPC, Shriram Finance, then it's the last day to be able to buy the shares and be eligible for these companies for dividend. Other than that, in terms of corporate action, Tata Metallics amalgamation into parent Tata Steel, that will be effective from today. Let's keep an eye out on some of these other important events, in terms of the India Energy Week. That's going to be starting in Goa. PM Modi will be inaugurating that as well. So an important one to watch out for. So this is the key highlight, key events that one is keeping an eye out on today.
Well, absolutely. And let's also talk about the top stories that we're tracking for you this morning. And the Organization for Economic Cooperation and Development, which is the OECD, says that the elevated shipping costs stemming from the Red Sea disruptions could soon impede the global fight against inflation. Now, in an update for its forecast for major economies, the Paris-based OECD left its 2025 global estimate unchanged at 3.0%, when growth is expected to be boosted by major central bank rate cuts as inflation pressures subside.
And meanwhile, Metropolis Federal Reserve President Neil Kashkari has said that the interest rates running at their highest level in about 23 years are not hurting the economy and could buy policymakers more time before deciding whether to cut rates. Moreover, added that the Fed policy is not as restrictive on growth as it appears to be on the surface of it.
However, on the commodities front, then UBS has released a bullish stance on gold and silver, forecasting a bull market in 2024, largely led by the likelihood of the Fed Reserve.
Liquidity challenges are a growing focus, according to the traders surveyed by JP Morgan. Around 27% of the traders see an inflation as having the biggest impact, followed by 20% for the November elections as well.
Well, let's shift focus back home then, because in a powerful Lok Sabha address in the ongoing budget session, PM Modi highlighted the opposition's waning spirit, criticizing dynastic politics and stressed the BJP's accomplishments. He asserted that India would become the third largest economy in their third term, attributing success to poverty alleviation, farmer support and controlling inflation. Let's go across and listen in to an excerpt of what he said.
आदरणीय अध्यक्ष महोदय, मैं देख रहा हूं कि आप में से बहुत लोग चुनाव लड़ने का हौसला भी खो चुके हैं। और मैंने सुना है बहुत लोग पिछली बार भी सीट बदली, इस बार भी कुछ सीट बदलने की फिराक में है। हमारी सरकार ने महंगाई को लगातार नियंत्रण में रखा है। दो युद्ध के बावजूद और 100 साल में आए सबसे बड़े संकट के बावजूद महंगाई नियंत्रण में है और हम कर पाए हैं।
Okay, on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more domestic updates after the break. Welcome back, and you're watching Market Cafe on ET. Now, let's keep it going and, get in some updates coming in from the Asian markets. In terms of an indication that we're getting in, most of these Asian markets indices are following what the Wall Street did overnight. So, most of them are seeing a fall coming in. Look at ASX 200 as well. That's down more than 0.7% in trade. And, they will be coming out with the Central Bank of Australia will be coming out with their rate decisions as well. So, that is what is expected in terms of keeping the Australian markets at least a bit on the subdued front, and a decline is what we're seeing for the Australian markets as of now. ASX 200 down 0.7%. Other than that, let's look at what the Japanese market is doing. Nikkei, that's also a bit of a subduedness. That's what we're seeing coming in this morning as well. Nikkei down 0.6% almost in trade as well. Other than that, when you're looking at Kospi or even a Shanghai, they too are seeing a decline this morning as well. Now, what's managing to hold on to the green and trading on the green side is the Hang Seng. That's managing to hold on to a bit of a gain this morning as well. And obviously, over the weekend, we've seen some bit of an update coming in from the Chinese regulator in terms of some of these updates on terms of how they would be maintaining a bit of the stimulus measures And on that front, they've not come out with the exit measures, but yes, you could keep an eye out on the chart. That's how the setup is looking like so far for the Asian markets, and most of them trading in the red, but Hang Seng managing to hold on to a bit of a green stay.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Now let's talk about OMCs, because OMCs have been leading the PSU rally this year with no major change in fundamentals and largely stable macros. Now why are they on a tear, and is it now time to be cautious on OMCs? Somit is joining in with an analysis of that. Good morning, Somit. Take it away.
Well, as you know that OMCs have been leading the rally in the PSU stocks of late, that is in 2024. But what has changed really for them fundamentally, if you see, largely on the GRM side and on the marketing side, the things are pretty much similar. The gross refining margin, that is Singapore gross refining margin, are largely stable around the $8.5 to $9 per barrel mark, while the marketing margin on petrol ranges in around 8 to 9 rupees per litre, while for diesel it is around 3 to 4 rupees per litre, which is largely the same what it was in 2023 last 3 months. So nothing much has changed for them been seeing, because at the start of 2024, if you see, the valuations of these oil marketing companies were either below or near the historical averages, that is the 5-year averages we are talking about. Now in case of Indian Oil Corporation, if you see, at the start of 2024, the valuations were at around 6.3, which was at par with its 5-year average, but now the valuations have shot up to around 8.5 times, and it's very near to its peak of around 9 times, that is the 12-month forward P we are talking about. When it comes to BPCL, the valuations were below its 5-year average at around 7.3 at the start of 2024. Now the valuations have shot up to 8.6, which is still below its 5-year averages, and in fact below its peak valuations of 13 times as well. And in case of HPCL, if you see, the valuations at start of 2024 was at par with its 5-year averages. Now the valuations have shot up to 6.9, but still below its peak valuations of 8.2. In case of margin of safety, that is the difference between the 200 DMA, 50 DMA and 100 DMA of the stocks to the current market price, Indian Oil Corporation is providing the least margin of safety, because the RSI is not only at 83, but the stock is nearly 75% away from its 200 DMA. Apart from that, it's nearly 59% away from its 100 DMA. Now BPCL also has an RSI of 83, and it's 53% away from its 200 DMA, while in case of HPCL, the RSI is at 71, and it's around 71% away from its 200 DMA. And lastly, when it comes to the analyst view or the consensus view, Indian Oil Corporation is providing the most downside at this moment. If you see the analyst consensus target price, that stands at close to 141, while the current market price is around 174, which suggests a potential downside of nearly 19%, while in case of BPCL and HPCL, the potential downside is anywhere between 7 to 4%. So keep an eye out for for all the oil marketing companies, especially Indian Oil Corporation.
Okay, Somit, thank you so much for update on other OMCs. But Somit, among all the insurers also, when we look at it, shifting gear to that, LIC has actually managed to outperform all its peers. It's seen a jump of almost 33% in the last 3 months as well. Could you help us analyze, the reason behind this outperformance that is coming in from LIC as well?
Well, we have seen a sharp outperformance when it comes to LIC in the last 3 months. Now, what could have led to this rally for India's largest life insurer? Firstly, it's the strong embedded value growth that we have been seeing on the back of strong equity markets, because as we all know that LIC is heavily invested in the Indian stock market. Apart from that, there's a hope of growth revival in FY25, given the low base. Analysts are expecting around 10 to 12% of growth for LIC's financials. Apart from that, the product portfolio has been widening for LIC. Recently, they had launched one non-par savings scheme which offered a guaranteed return of around 10%, and yesterday they also introduced one index plus product. So a widening product portfolio is also one of the reason. Apart from that, analysts are also expecting a likely step up on the dividend side. Now we all know that LIC had incurred a huge notional gains of around 3 lakh crore rupees as per analyst estimate, and because of this the available solvency margin for LIC has also increased. So analysts are expecting a huge dividend payout coming in from LIC going forward. Apart from that, the recent regulatory changes, proposed recent regulatory changes related to surrender charges are expected to have a very limited impact on LIC. And lastly, if you see, the government stake dilution date has also been extended till 2032. So there is no overhang of government coming in the market and selling its stake. And lastly, the most important part is the valuations. Now, if you see the valuations of LIC, they were not only cheap 3 months back, but they are currently also very cheap compared to its the private life insurance space. If you see the 12-month forward P stands at around 17 times, while that of other private insurance like HDFC Life, SBI Life and ICICI Pru is anywhere between 62 to 68 times. Also, LIC is the only pure play insurance company to trade below its embedded value at around 0.7 times, while the other players are trading anywhere between 1.5 to 2.5. However, there are a couple of risks involved with LIC. Firstly, is the growth of LIC has been lower than its private players like HDFC Life, SBI Life and ICICI Pru Life, and also on the other side, the cost element is a bit bloated and elevated for LIC as compared to private life insurers.
Thanks so much for taking us through that, but stay with us and let's talk about some quarter 3 reviews, and let's talk about Bharti Airtel because that has delivered a mild miss on its quarter 3 numbers on account of weakness from the Africa business. It's a first sequential decline in margins in the last 6 quarters left by Africa. Somit, so tell us more about these numbers.
Well, a slight miss for Bharti Airtel in the third quarter, but that is largely on account of weak numbers coming in from its subsidiary Airtel Africa. The India mobile business, which is the key stock driver for Bharti Airtel, that has reported yet again a strong performance in the third quarter of FY24. If you see India mobile business revenue, they grew by nearly 3%. EBITDA was higher by around 3.7%. The subscriber base increased to around 34.56 crore, while the ARPU number was up around 2.5% to close to 208 rupees per user per month. Now, if you see the India mobile business, growth was largely ridden by higher subscriber base and higher ARPU. ARPU grew for the third consecutive quarter without any tariff hike, and this was owing to the rising 4G subscriber base and increasing postpaid penetration of Bharti Airtel in the Indian market. Now, apart from that, if you see the total subscriber base of Bharti Airtel has grew for the 8 consecutive quarters, and this was largely led by the 4G subscriber addition that the company has been doing. Apart from that, the company's data consumption on the network also increased, which indicated a strong 5G subscriber addition for Bharti Airtel. Overall data consumption was up around 4%, while the data consumption per user per month increased by around 1.4%. Apart from that, all the other segments like broadband, DTH and enterprise largely reported a stable set of numbers. And the most important part for Bharti Airtel is the net debt decline around 5,100 crore, and this is for the 5th consecutive quarter where we have seen a decline in the company's net debt. And also when compared with Reliance Jio and Vodafone Idea, Bharti Airtel outperformed its peers in most of the metrics. So a stable set of quarters for the India mobile business, but on a consolidated basis, it's a slight miss on the back of a weak African operations.
Okay, Somit, thank you so much for that update on insurers, Bharti Airtel, everything, and in terms of OMCs as well. Thank you so much for joining in with us this morning, Somit. But let's move on. And as the February 29 deadline looms over Paytm Payments Bank, consumers are switching to other UPI apps. Vendors in particular are making a beeline to the other apps in the market. Bhavya Dua gets us a mood check from the bustling markets from Delhi's Connaught Place. Let's go across.
Paytm is a widely used app by the brick-and-mortar community in India in order to accept payments. And the same is used by retail users to make those payments for their small and big purchases. But now, with the recent RBI actions on the payments bank, there have been concerns about the security of the financial transactions made through these apps. Paytm was able to gain popularity in the country since demonetization happened in 2016. But now, there have been concerns over the safety and security of its usage. We are here at Connaught Place, one of the biggest markets in New Delhi, and let's understand what the mood is like amidst the retail users as well as the big and small traders and vendors on the usage of the Paytm Payments Bank.
Paytm is not that okay because you have to connect KYC and most people are not on Paytm for now, and many of them has connected with their bank account, so there is no point in having a Paytm wallet.
Of course, if something happens and if it gets down for a time period, then eventually we have to shift to the other modes of payments, which is PhonePe and Google Pay in the market.
I don't think that it will suffer a lot, the business will suffer a lot, because many customers come with multiple options like PhonePe or Google Pay or something like that. My personal experience is that I'm working with HDFC Bank, so HDFC Bank also provides the same digital platform for receiving the payments from the customer.
The volume of Paytm is not very high. I'm using other apps, so I think there won't be any big difference we will face that if the Paytm is not there, then we can always go for the other.
We are putting restrictions on the Paytm since they are not complying with the rules. So we have already warned our group here that Paytm is actually very popular with the people like Khonchewalas or Sabziwalas or whatever, and even a small payment of 707 rupees 50 paisa is acceptable there. But now they will have to face this wrath just because of Paytm. That's what I feel, that since Paytm is not complying, so it is rather better in the interest of Paytm to comply with the RBI.
So the mood check tells us that there has been a wave of shaking trust and credibility towards the Paytm app, both by the traders as well as by the retail users. Now only time will tell if Paytm will be able to make a comeback or not. With that, Bhavya Dua signing off for ET Now.
Well, we'll see how the Paytm saga pans out. Thanks, Bhavya, for taking us on ground on what people are feeling about Paytm at the moment. But let's get a move on and let's talk about the India Energy Week, because PM Modi is all set to inaugurate that event in Goa today, hosting a 4-day mega event. The agenda includes a roundtable discussion with global oil and gas leaders addressing crucial topics like energy deals and green hydrogen. My colleague Prakash Priyadarshi is joining in with more details on this event. Prakash, take us through the event.
The Prime Minister is going to inaugurate India Energy Week today at around 10:30 a.m. PM will inaugurate ONGC's Sea Survival Center, and at around 11 a.m. the Goa edition of India Energy Week will be inaugurated by the Prime Minister. He'll also hold roundtable discussion with the global oil and gas CEOs along with various global energy experts. This mega event is being attended by global companies like Rosneft and Saudi Aramco, among others. This 4-day mega event likely to see participation of 17 energy ministers of Iraq, Nigeria, Guyana, Sri Lanka are expected to be present, among others. Discussions surrounding to various areas like energy transitions, the development of future-ready options, energy options, development of alternate fuels, likely to take place amid quest for energy security for big consuming country like India at affordable prices. Along with that, this year's in India Energy Week being held at a time we are seeing some disruption in Red Sea. Also, the two ongoing war between Russia and Ukraine and Israel and Hamas far from over. So this mega event is going to provide an opportunity to the consuming countries and producers to find an amicable solution to the challenges they are facing.
Okay, Prakash, thank you so much for that update this morning. But on that note, let's just step into a very short break. Don't go anywhere. We'll be back with more stock updates after the break. Welcome back, and you're watching Market Cafe on ET. Now, let's get more stock specific, and Gaurav is joining in with us with what are the important brokerages that have come in this morning, which are the stocks that are on the brokerage.
And they're doing it by acquisition, and that is the reason why Investec believes that the BAT could increase almost by 67% CAGR over the next 2 years, and that is why they have initiated with buy rating and a target price of 425 rupees per share. Let's also talk about Varun Beverages. We have got the numbers, and if you look at the quarterly numbers, it was quite on the lower side when we look at on a quarterly trend, but when we look at CY23 numbers, they were actually stronger according to Jefferies. They also believe that their OPEX, their debt levels have gone up because they are going to expand their capacity expansion is going on, and in CY24 we may see the capacity expansion almost by 45% over what we have seen in CY22, and that is why Jefferies has maintained buy rating and a target price of 1480 rupees per share. Let's also talk about Ashok Leyland, where we have got the numbers for the quarterly results, and if we look at Jefferies estimates, they were actually higher than what Jefferies was estimating. EBITDA per vehicle increased almost by 9% on a QOQ basis, and it was also at the all-time high levels. And Jefferies also believes that from here on, better realization and high cost of saving is going to lead the profitability in Q3 and the coming days also, and that is why they have maintained buy rating and a target price of 210 rupees per share. Lastly, let's also talk about India strategy, what Morgan Stanley has to say about it. So they believe that Indian market is going to stay strong on the back of strong macros, corporate fundamentals and the domestic bids. They also believe that the budget actually added some kind of rally to this bull market that we have seen right now, and they also believe that volumes are going to rise and this could further increase because of the multiple reasons that they are seeing in India. And to ride this rally, they believe that right now we should prefer cyclicals followed by defensives and large cap stocks, and lastly we should prefer small caps and mid cap stocks. To conclude this note, they are going overweight on financials, technology, consumer, discretionary and industrials, while underweighting on all other sectors. So it seems that Morgan Stanley is also coming up with a bullish view for India. So let's see how these sectors specifically pan out for investors as well as for the equity market and the other stocks.
All right, Gaurav, thanks so much for taking us through that. With that, let's also take a look at all the stocks that could be big buzzers in today's trading session. And let's start by looking at IndusInd Bank, because we've just got word overnight that HDFC Bank has received RBI approval to increase stake in IndusInd Bank up to 9.5%. What's key to note is if HDFC Bank fails to acquire major shareholding within a period of 1 year from the date of the letter, the approval shall stand cancelled. So, well, on the back of that, both HDFC Bank as well as IndusInd Bank will be in focus today. Moving on, let's talk about IEX. It could be another stock that will be in focus today because that company has achieved 10,893 metric units total volume in Jan 24, an increase of 26% on a year-on-year basis. That's a large positive coming in for the stock. It's also got the highest monthly traded volume since inception, so that's a key positive coming. Let's also talk about Shree Cement, a stock that was under pressure yesterday, 5.2% downtick coming in on that stock yesterday. Now, we've received clarification from the company that a show cause notice was indeed issued in the month of January to the company, but there is no demand for tax deposition in the said notice. So based on this development and based on this clarification, let's see if the stock reverses all the losses that it incurred yesterday and manages to slip into the green. And well, let's also talk about Coforge, because Jefferies has come out with a note on Coforge's management meet. They say that demand environment remains tough and client budgets may remain constrained in 2024, and the management continues to expect steady growth in FY25 versus FY24, led by healthy order wins. And the management is also expecting gross margin expansion to drive up adjusted EBITDA margins in FY25. So, well, on the back of this commentary, let's see how Coforge pans out today. And let's also talk about Zydus Life Sciences, because the board will be meeting on the 9th of February to consider buyback, so that will be in focus. And Shilpa Medicare, the board will also be meeting to consider fundraising. So, well, all of these stocks will be in focus today. Let's see how these stocks pan out in today's trading session, Winnie.
Absolutely, that's one to watch out for in terms of the news that have been reported, earnings that have been reported as well. But, in terms of Britannia, let's see what we are expecting from the company this time around in Q3. Overall, FMCG companies continue to highlight that, rural slowdown, that has been a bit of a, the sluggishness has continued in rural areas, and that is something that could impact Britannia as well. So, revenue growth, what we're expecting this time is just a 2% revenue growth. 4,296 is what we're expecting the revenue at. In terms of overall the profitability, muted to a bit of a negative side is what we're expecting the profits, a bit of a decline on that front as well. 553 crores is what we're expecting the profits as. Margins expect to see a contraction as well, 18.9% versus 19.9% last year. Volume growth, which we really keep an eye out on in terms of for all FMCG companies, that's expected to be quite, maybe we could say in a bit of a range is what is the expectations coming in from different analysts. So from 0% to 3%, so flattish to 3% max is what one could see the growth for volume growth, but it's going to be on the lower single digit side in terms of the volume growth for the company. Rural slowdown, that's expected to continue. Increased competitive intensity from regional brands, that's something that will be weighing in on the company as well in terms of the volumes. While in terms of the grammage increase, that's something that could maybe aid a bit in terms of the volume growth of the company. So let's keep an eye out on that. And then that gross margins also seeing a decline because of the high base that we saw coming in last quarter. So that is why the margins are seeing a decline this time as well. Higher ad spends is something that is impacting the EBITDA margins of the company, and that is why a contraction of around 100 basis point is what one could see in terms of the EBITDA margin of the company as well. So yes, let's keep an eye out on Britannia's numbers. Commentary is going to be key in terms of rural area. How is that distribution shaping him? How are adjacencies performing as well? And overall, in terms of the growth trends that one could see, are key factors that one should watch out for in terms of Britannia's Q3 numbers that will be reported today.
All right, Vinny, thanks for taking us through what we can look forward to when it comes to Britannia's Q3 numbers. But let's also shift focus to some other news and updates that we've been tracking for you. And King Charles has been diagnosed with a form of cancer and will postpone public engagements to undergo treatment. Now, Charles became king in September 2022 following the death of his mother, Queen Elizabeth. He has begun a series of treatments and is looking forward to returning to full-time duties as soon as possible. And well, with the commencement of the special Uttarakhand Assembly session on Monday, the stage is set for Uttarakhand to table the UCC bill today. This special 4-day session in Dehradun has been specifically called to pass legislation on the UCC following approval from the state cabinet.
And following the Bombay High Court order to launch a website and mobile app for complaints on the air pollution, the BMC launched the Android application called Mumbai Air on Monday. Meanwhile, an app for iOS phones will be launched later as well. Some update coming in on the weather front. After a spell of rainfall over the northwest and adjoining central and east India for a few days, dry weather is likely to continue for the next 4 to 5 days. While on Monday, light to moderate isolated rainfalls and snowfall happen in Jammu and Kashmir, Ladakh, Himachal and Uttarakhand.
Alright, with that, it's a wrap on this edition of Market Cafe. It's a goodbye from Winnie, me and the entire team that put this show together. But you stay tuned to the channel because the market takes all the action ahead.